Hello, everyone, and welcome to this TO Markets webinar. My name is Janne Muta. I'm the Chief Market Analyst for TO Markets. And today I want to talk to you about pitfalls of trading and the shortcuts to an effective trading strategy. I have a bit of, I think, 22 years of experience in both retail and institutional side in trading. And I know from that experience that there are quite a few different pitfalls that we need to avoid. But hopefully this presentation, this webinar will help you in avoiding some of those. And obviously, no one single webinar will ever help you to become a successful trader. It's always a learning curve. But each and every webinar or a learning experience can be very useful in if you just find some nuggets. If you spend half an hour, 45 minutes in a webinar, and if there is one or two things that help you forward, then it's well worth it. And this is sincerely what I hope to do, that I will be able to give you some knowledge, some understanding on how the markets work, how you should develop yourself as a trader, and what kind of strategies you should be creating, and what are the strengths and weaknesses of those strategies, how to just survive from one day to another, because trading is about a game of survival, really. So let's move on. I want to iterate a couple of things. I want to really emphasize these things. I call them the fundamental truths about trading. First of all, trading is about almost 100% about psychology. There's very little physical about trading. It's mostly clicking the mouse, making sure you are healthy when you trade, and obviously you don't want to drink or take some bad substances while you are trading. You want to have a clear head. But apart from that, anything and everything in trading depends on your psychology, depends on your attitude, depends on your attitude on learning, on your risk. What's your risk aversion? What's your attitude towards working hard and making sure you achieve goals and develop yourself? And if there are some anger issues or fear or all those things inside you that can hinder your progress, obviously those need to be sorted out, and you need to be able to move forward without those. And it's sometimes a little difficult, because I think trading is one of those things where all of your maybe not all of it, but lots of different challenges that you have, those will be exposed. The markets and trading have this tendency to bring your weaknesses to the front so that you have to face them. And if you don't face them, it's going to be hard to develop as a trader. And this brings me to the second bullet point here. Success is only rented, and the rent is payable every day. What it means is, and how I understand this, is that if you don't do your work, the required work every day in understanding the markets, understanding or maybe doing the analysis is a better expression here. So doing your analysis, following the news a little bit, and developing yourself as a trader, again, it's going to be hard if you don't do those things. But if you want to belong to the group of winning traders, and that basically means that you have to be among the best traders in the world. Because in the markets, those with more skills take away money from those with less skills. And therefore, we need to be able to come into this game with a clear plan on how we grow and become better as traders, and how we then execute our plan on a daily basis, how we become better traders on a daily basis. It's an ongoing process. And then strategy input equals the strategy output. This sounds very simple, but there's a big, big valuable truth in there. Because you have a strategy, whether you acknowledge this or not. You are running a strategy. It might be good, it might be excellent, it might be productive strategy, but it might be something that changes every day and there's lots of variations to it and there's no constancy and it doesn't help you to make money. But if you understand that whatever you put in your imagination, your thinking, your attitudes, your beliefs, your education, all those things create the input into your strategy. And then those things basically dictate what the output is going to be. And when you start thinking in this way, you start to become careful with your input on how to trade, how to expose yourself to certain discussions in the internet maybe, or what sort of attitude you build towards risk management or winning or losing. Then you have to realize that there's no right or wrong in trading. There's only feedback. I could say to you, or maybe your parents have told you many times that that's not right, that's wrong, you can't do that. And there are things in life that are obviously wrong. We shouldn't hurt other people. We shouldn't steal. We shouldn't lie. We shouldn't cheat. We can say that those things are wrong, but in trading, if you start thinking that a losing trade is wrong, you create psychological baggage that makes it harder for you to take those mistakes and extract value from them, because those mistakes are very highly valuable. You just need to love your mistakes, and you need to be able to analyze them and extract the information that is there. And only if you understand that your mistakes, your losing trades are part of the feedback that you get from your trading operation, only then you can start to analyze those and really understand the value that's hidden in those. So there's no right or wrong, there's only feedback. Then this brings us to the last point, which is highly important. Trading is all about the process that you have. How you prepare for the trading day, how you find your trades, how you analyze the charts, what kind of analysis you follow, and how you execute your trades, how you manage your risks. Where do you place your stops? Where do you exit your trades? So once you realize that it's all about the process, you start to focus on the correct things. You don't focus on the output so much and let your emotions go up and down because of some days you lose and some days you win. But you start to focus on the process, on the input. And once you get to that stage, then you can start increasing your knowledge and understanding of markets on a daily basis. And that's when you grow, and that's when you know that you become a better trader. You know, if you take, say that you increase your effectiveness and your learning and make yourself a better trader by 1% every day. And if you do that 0.01 increase every day, and you do that over a year, say 250 trading days, then that's a big improvement. Anyway, before we go further, let me remind you that all the views expressed in this presentation are our opinions only and are made available purely for educational and marketing purposes and do not constitute advice or investment recommendation, and do not in any way constitute an invitation to acquire any financial instrument or product. TO Markets and its affiliates and consultants are not liable for any damages that may be caused by individual comments or statements by TO Markets Analysis, and assumes no liability with respect to the completeness and correctness of the content presented. So if you agree with these statements here, if you agree with this disclaimer, then you should continue watching this or stay in this webinar. Otherwise, I would advise you find something else to do. Because one of the first things that we need to understand is that every investor, every trader is solely responsible for his own actions. So we don't provide investment advice. We give you tools to develop yourself as a trader. So this is what this is about. And if we have an understanding that, yes, this is only educational material, then we can move on together. My background is there. I started 1998 as a futures trader for a hedge fund in London. Since then, I have worked in several different positions, managing a equity investment fund in Helsinki, and then I have worked in Cyprus for a forex broker in the past as a chief market analyst, and in my current role as the chief market analyst for TO Markets, it's my job to help you. This is purely what I'm here for. TO Markets wants me to help you to become a better trader, support you with my analysis, support you with my trader education, and I hope that we have many of these webinars in the future so that we can, I can learn from you every now and then. I want to learn where you are as a trader so that I can tailor my offering to help you better growth. And I'm sure as you read my analysis on tomarkets.com/analysis, or you go to our YouTube channel, I'm sure you'll be learning one or two good things as well. And I'm saying this because we are constantly hitting the targets, the analysis. So even though I talk about targets and levels and market direction, it is not trading advice. I'm not telling you do this, do that. I'm saying use this, follow my analysis, and use it as a learning tool for yourself so that you can then do something similar and learn to trade better. So basically, I know that there'll be days when we are less successful. There are days when we are really helping you guys well, and then there are days when things don't go so well. But I'm getting very good feedback from the clients. So please, maybe you can go and you can take this material as something that just helps you to become a better trader. I would love to see you in 6 months' time, in a year's time, as being much better than you are now. I would love to see you coming back with the feedback that, yes, I'm developing, I'm making more pips than before, and I have a higher success rate than before. This is the feedback I would love to hear. Now, today I really want to help you to understand price action and formations. So, pitfalls of trading, why traders fail, trading psychology, all this is included here if we have time. But first and foremost, I'd like you to understand a little bit more about price action and formations. And then on Friday, there's going to be another webinar on Friday for those who have registered for this one and have deposited and decided to trade with TO Markets. We have a client-only, a trader-only webinar on Friday, and there we will go even more deeper or deeply into different kinds of strategies. So let's start with the classic uptrend. And I would love to hear your comments on and questions if you have any. But first of all, let's go to USD Swissy. And can you see the charts now? Please let me know in the chat if you can see charts. Okay, good. Excellent, excellent. So, how would you define an uptrend? Oh yeah, there is a recording for this. Certainly, you'll get a recording emailed to you. Right, no problem. Okay, so maybe in the chat box you can tell me something about an uptrend. What is your idea of an uptrend? I mean, this might sound very, very simple, especially if you've been trading for a longer period of time. But I have learned over the years that the simple things are the most effective in trading. You can have your chart full of different indicators, and that really doesn't help you at all. Actually, it hinders your learning. It prevents you from seeing things. And I mean the things that are relevant. So, okay, no comments at the moment, but feel free to share your thoughts if something comes up, if you want to comment on something. Okay, yes, price increases. True. What might be the reason for price going up? I'm actually, it's quite simple. If you have more demand than supply, the price, exactly, thank you. If price goes up, it means that there are more buyers than sellers. There are bigger hands buying. There are bigger traders, institutions taking the price higher. But what we can do, we can take this price action and we can understand what the big money is doing by just following the charts. Isn't it amazing? I find it so fascinating that you don't actually need anything else but these green bars and red bars, candles, and you'll have an understanding of what is happening, what the big money is doing, because they can't hide. The bigger your fund, say if you run an investment fund of, $5 billion, if you start buying in any meaningful fashion, just can't hide your buying. Price is gonna react to it. Obviously, depending on how much there is in terms of, what is the liquidity of the market? If it's just some stock in a small stock exchange, or if it's Euro USD, there's a huge difference on how you can operate in those markets. But the fact that we have markets pushing above a resistance and then creating a higher high. So that's our first, maybe not the first sign, because if you go down here, you can see that we have the first signs of the price moving higher. It's starting to create higher lows. Higher low, and then a higher high. Price basically moves beyond this resistance, this swing high here. So when the market is up there, it makes sense to conclude that we have upside momentum. And then it makes sense to conclude that we probably are going to have another higher low. And once the price breaks yet again higher and creates a higher high, we will have a higher low. Not always, but it's likely. This is something that's worth remembering. There's no certainties in trading. Uncertainty is the only certainty in trading, but there are probabilities. And if you understand these simple things, then you can put the probabilities in your favor. And this is what I do with my analysis every day. I look at the price action in different time frames and different markets, and then I create a picture of supply and demand and probabilities. I will get an idea of probabilities. Sometimes I'm wrong, but quite often I've been very, very correct. And this message that the price tells me is the key. How do you know that the trend is over? Any ideas, any thoughts on how do you know, or how do you anticipate or think or guess that the trend might be over? Sort of the classical way of thinking is that as long as the market doesn't violate any lows, then we have an uptrend. But then there will be a point when the market doesn't honor those supports anymore and moves lower. Then the uptrend isn't in force anymore. So obviously, we can use moving averages, for instance. We can use shorter period moving average combined with a longer period moving average. But I would say, understand what's happening with the price. I'm using these moving averages as a highlight. Price is above the 50 and it's making higher highs, so it's likely to move higher. So then we have the short period moving average. These are actually 50 and 10. So 50 period on the blue and 10 period red. The more this difference grows, the more momentum there is in the market. And later on, the difference starts to decrease. There's quite a few things, we can go into those later, but just want to move on so that we have enough time to cover all the material that I had in mind here. Okay, then next, the classic downtrend. And while I bring up this USD yen chart, what comes to mind about downtrends? Anything and everything, whether it's indicators or price action or feelings or ideas or your trading experiences, just let me know in the chat box. But let me bring up this chart for you. So here we have, yeah, supply. You have a lot of supply, but that's not enough on its own. What else do we need? Lots of supply, but there could be also lots of demand, and the price goes sideways. But if the demand is greater than the supply, then the supports can't hold. So here we have, let me make this a little wider. Yeah, more sellers than buyers, very good. Here we have a support that is basically price. The market attracted buyers here, but then once this level was broken, what we have here is we have a lower low, and because that support is broken at this point here, let's go there. At this point here, we have to start at least asking the question whether it's more likely that the market is going to again rally higher, or whether it's going to keep on rolling over as it's doing at the moment. And there are other technical tools that we can use, trend lines and channels and stuff. But this fact alone is the most important. A support is violated. Market didn't find buyers there, it didn't find buyers here, but it kept on moving below those supports. So we have to anticipate that there is, or say that there is a bigger likelihood for market now creating a lower high than a higher low. So lower high, we obviously know this because we have been here and watching this, but here's the lower high. So at least now there's a very clear downward trend. Market breaks this support, creates a lower high, and then breaks this support. So it's highly likely that we're now going to have another lower high. And indeed, this is what happens. So on Friday, we're going to take a look at how to trade these levels, how to trade, what kind of signals we might use, what kind of risk analysis we want to do, how to manage the risk. But I've noticed that a lot of traders have this tendency to focus on one single idea. They focus on something, a signal really, and they forget the context in which the signal appears. Because, for instance, just to give you an idea, a crossover signal here in stochastics can have a different outcome than a crossover signal here. So the blue line here crossing above the red line in the stochastics oscillator is a bullish signal, and the price rallies a bit, not much, but a bit. And if we go somewhere here, this signal is quite good. Market rallies up there. But when we get these signals in a downtrend, they are useless. So we need to understand how to use different technical tools at different stages, different market contexts, or price action contexts. So, market moves lower and lower and lower. But there must come a reversals at some stage. No market keeps on going down forever, and the reversal comes. By now, after studying the reversal from the uptrend to downtrend, you might be able to see what was the signal of this market turning bullish. Can you see here? Maybe you type in the chat box. Why and where? What was needed for the market to turn bullish? Earlier we had an opposite case. Yeah, thank you. Thank you. Market broke the lower high. There was a lower high, and here was a lower high. And now the market rallied above this lower high. So that was our first sign that market might be creating something else. And again, I have to correct myself. It wasn't the first sign because I was doing analysis on this one actually. And this price action here was also taking very close to an important level. So that was another important factor here. So, but the fact is we have a higher high and then we have a higher low. And these here again and again and until the price again starts to move sideways. So when you see say USD Yen, USD Swiss creating such a turnaround, and at the same time Euro USD is weak, then you have a much better idea on what is likely to happen, because you're not tied into one signal, one indicator or a bunch of indicators, but you have an understanding of big money flowing from one asset class to another. The big money changing their direction from short to long, because this can't happen without really the big money changing their attitude to this market. If they start buying, this is what's going to happen. And if they start selling, this is what's going to happen. And as long as we can see these sequences, we can understand that there are probabilities, or we can estimate the probabilities and say that they are on our side. Okay, I need to rush on because it seems that I'm running out of time. I'm spending a little bit too much time here. So next, S&P 500 and wedge. I want to use fairly recent examples because they are relevant. They're more relevant, and they are something that I've been analyzing myself lately. S&P 500, I didn't write an article about this, but still, it's kind of recent. So, if you look at this, we could say that, yeah, there is a downtrend here. And if we use regression tool, we can see that the market broke out from this regression channel and then returned back to the channel high. So this was obviously a valid and important way of making this analysis. But if you do wedge analysis, if you look for these early changes in trend that often reveal themselves as bullish or bearish wedges, then you have let's actually do this, because different people see markets differently. So, and I want to these red. One by one. I want to make them a little more visible here. Yeah, so the benefit here is that when the market is trading inside the wedge, you're already seeing the loss of downside momentum. You're already seeing that this market is the downside, the sellers are already getting weaker. And then the price breaks out. In this case, price retraces to the previous low before it starts to rally higher and then rallies outside of the channel. There's also another way of drawing this wedge, and this is also valid. And here, but whichever way of drawing the wedge, you can get an advantage compared to those who only use the channels. Or alternatively, obviously, you could draw a trend line here from that high to that high. And yeah, that would be a valid way of doing the analysis also. But wedge definitely gives you more information, and earlier it tells you that bears are losing. Their ability to push price lower here is much bigger than it was here. So it's likely that the market is approaching a level where the institutions want to be buying. All right, then let's do the next. Let's go to New Zealand USD. I have a couple of things there, ranges and double. Go. Kiwi USD. So as you can see, market has been ranging lately. So we have supply and demand roughly in balance here. But what might be the reason for it? One of the reasons I can see here is that market is finding support at a previous resistance. And then if we look what's happening here, using the Fibonacci tool, we can see that the 50% coincides with these broken supports. So that's probably important. And the price action actually tells us that it is important. Now, on Friday's webinar, we can study how to trade these formations. But I want to just point something here before we move forward. Trend here was to the upside, and all these sideways movements, they are potentially reversal formations, but they can also be continuation formations. And in order to get some idea of what might be going on there, we can say that, okay, here we have equal tops, but at the same time, from this low, we have a higher low here, and then there's another higher low there. So if this keeps on going on, that will build pressure against the top. And what does it mean? Why do we get higher lows here? Can somebody tell me? Can somebody give me an idea? Why is this low higher than the previous low? And why is this low higher than the previous low? While you type in your suggestion, I want to go to another spot in the recent history where we have a range. Yeah, the buyers are coming in, but why are they buying at higher levels than before? The reason. Here we have another sideways formation, a range. This was part of the reversal process. The market found support down here, then started to move sideways. And once this was solved or resolved to the upside, the market really started moving higher. So this was an important area, and what the institutions were doing here, they were slowly accumulating their positions. And once they were ready to push the prices higher beyond that resistance. And then there was a very good rally. then they started distributing their positions, their stuff that they bought down here, inventory that they bought down here, they sold up there, and the prices started to move. So that's an example of a range acting as a part of the reversal process, and the same kind of here too. Now, if this keeps on going, and if we get higher lows, that basically tells you that people are competing. Traders want to be buying at higher and higher levels because they believe that this will give in. This will get violated and the market moves higher. And I think that is based on the fact that we have higher low, higher low, higher low, and higher high, higher high, high. But there's still potential, obviously, for the market just to break lower. If a sudden news event happens that wasn't priced in, then support might break. But if market just keeps on buying at higher and higher levels, then that builds pressure against the top. Let's see what happens with this market in a few days' time. We know. A few days' time, this current price action is going to be history, and then we know what actually happened. But, the stuff we talked about, higher lows and higher highs earlier, you can see it working here as well. You just need to know what you're looking for. And you can see that there is buying going on. There are surprises every now and then. These markets tend to surprise. And then there are different kinds of trends. So in order to see this trend, you would need to go to an even smaller time frame. Okay, a couple more, or maybe one more thing about this market, because I promised to talk about double tops. So here we have a highly important level. Why is this level so important? Can somebody tell me, why would this level be so important? Why I'm calling this an important level? Market rallied back to the same level again and fell. But why is this important level? Oh yeah, it's a double top formation, true. But it basically tells you that this area is a level where institutions don't want to be buying. So that makes it important. They don't want to be buyers anymore. They rather be sellers, like we discussed earlier. They buy down here, they sell up there. Institutions, if they want to sell without you noticing it, they need to sell upwards, uphill. Price needs to go higher when they are selling, because they are selling such vast amounts. But you can see how the price starts to drop here. So basically, the next time the market comes to the same level, there's a big risk of price not going any further, but it might actually reverse and move down. So, two very important touches on the same level, and both times the market moved big time from there. Okay, it's getting late. We are almost beyond the time allotted for us today. Do you have questions that you would like to ask about trading and about things that I've been talking about here today? We have about 8 minutes to go. So while you type in your questions, if you have any, or comments, I'll bring up two charts. I'll bring up, first of all, CAD yen. And this here is very important because we can see several things happening here. First of all, here's another triangle. And those that have been following my analysis know that I was talking about this 79.09 level and how the market, after moving lower for quite a period of time, best part of the September, it moved down, then it started to consolidate. And it started to create higher lows. And when it broke up there, I was saying that if it retraces back to this support, we'll be looking for buy signals. Now, what happened was that there was news that the President Trump was he was COVID-19 positive. He was tested positive, and after that he was hospitalized. So everybody was buying yen, and this currency pair dropped like a stone through the support level. Then I talked about these higher lows here and the market. And when the market was trading here, I was saying that if it creates a higher low above this low, then I think there's a good chance that it moves to our target 1, which was here, and target 2, which was up there. So both targets were hit, but this is a bottoming formation, one kind of bottoming formation where you have a bullish triangle, kind of similar to what we saw in New Zealand USD earlier. But the location of the formation is different. But who knows, this market could be going higher now. It has created a higher low and a higher high. Obviously, this was higher high as well. So maybe we'll have this market retracing a little bit, creating another higher low now, and then moving higher again. And then obviously we want to know what are the levels, and you can go and read my analysis to check those levels. But I guess 61.8 Fibonacci level is important. So maybe the market will move to this sort of area eventually. But that's still way off. That's still, maybe, I don't know. Who knows how long it will take? It will take before the market moves up there. But we don't have to know. We just follow what the market does, and we trade with it. Now on Friday, we will have more in-depth webinar for those who deposit with us and start trading with us, because we obviously want to save all the best bits for the people who are our clients and who are trading with us. But I think before we finish, as I don't see any questions coming, I want to really quickly cover this. These 4 things are about, they cost traders hundreds of millions every year. Globally, I mean. If people have this idea that we have to get rich and quick, that will lead into all sorts of different trading sins. If they think that there's no work required, you just click your mouse as you get signals, they will notice that somebody else will take their money. Then if they believe these adverts where some people tell that, we have 100% success rate, there's no losing trades, that's going to be costly and expensive as well. And if they believe that there is a secret formula of wealth creation somewhere, that's going to be also quite expensive for these traders. Oh yeah, sure. If you have a TO Market VIP account, just email our support if you don't get a link from us. But you'll get a link with invitation to the next webinar. And also, I think I'm going to just quickly run through these because I don't have time to talk about these. I will talk about these in another webinar, but I just want to quickly click through them so that you have them in your video, and we can go deeper into these things because these things are valuable. People usually want to know about a different entry methods, but they ignore everything else. And with this experience of 22 years, I know this is valuable. These equal money. Understanding and integrating these into our thinking and attitudes equals money. And it's much nicer to be a successful trader than one with lots of losing trades all the time. Now, if you want to stay up to date with our analysis, go to TO Markets channel in YouTube and hit this subscribe button so that you are alerted each time you get there is new content, new analysis available. You might want to also go to tomarkets.com/analysis, where there is a daily market commentary or analysis. And if you join our TO Markets announcements channel in Telegram, then you will obviously get timely notices of these new, whether it's a video or analysis on our website. I would like to encourage you to go and find out about trading conditions with TO Markets. Give us a chance, deposit something, see how it works, see if you like the trading conditions, and if you want to become a VIP client, you have no monthly fees at all. You just trade without monthly fees and with very tight spreads. It's a great deal. I think, it's something that is exceptional in the industry. So, thank you, trade safe, and I hope to see you soon in the next webinar. It was lovely to be here with you.